In this video, I'm going to talk about analyzing your clusters of winning trades and clusters of losing trades. Stay tuned. Hey traders, a very warm welcome to you. So we're in this overall top-down approach look where we are critically analyzing our trading performance. And in this video, we're talking about the clusters of winners or losers. Now, I'm very much of the school of thought that you can analyze your trading and get significant results to your bottom line just from adjustments to your current trading, as well as going out there and finding new strategies, setups, new ideas, all that kind of stuff. So, assuming you've got a little bit of data for your trading, not brand spanking new. If you're brand spanking new, welcome, and go and check out some other videos we've got from some newer traders. But considering assuming you've been trading for a while and you've kind of got some data on your trades and you've kind of seen the ups and downs and the psychology of the game and all that kind of stuff. Clusters of winners and losers. How can you utilize that information to have better performance and ultimately make more money, which is what we're all looking to do. Less risk, more money. Okay, so there are two reasons generally why we have clusters of winners or losers. Number one is the market, and number two is our mindset or psychology. Why do I say that? We have clusters of winners or losers. If we're doing very, very well and we've got the right strategy and it's in the right market conditions, so we've got a trending strategy and it's in a trending environment, we're going to have those big winners, winner. But if we start to plug that trend trading strategy into a mean reversion quiet market, we're going to have clusters of losers. Example, day trader. If you're a day trader, you're looking for that volatility expansion. If it's very volatile at the open for the past week and you're trading kind of first pullback strategies or range expansion strategies, win. You start trying to use those range expansion breakout type plays during a lunchtime choppy period where nothing's going on, you're going to have loser. So that comes down to market. The cluster of winners or losers is very much dependent on the market conditions you're trading. Now, the second part of this is the clusters of winners or losers can come down to mindset. If we are not in the right mindset, we're not in the right frame of mind, we don't have the right psychology aspects to it. Let's say we're not prepared. Let's say we're trading because we're frustrated. A good example would be, okay, you've had a decent enough run, your equity curve is running up well, and then you make a bit of a mistake and you draw down quite a bit on that equity curve. And then you get frustrated, you get angry, you kind of all these negative emotions come in, and then you trade badly for multiple amounts of trades and you get a cluster of losers. And that's purely because your mindset has gone off tilt. You know, you're not in the right frame of mind, you're trading from a completely different place, whatever that may be, whether that's frustration, whether that's fear, whatever, it's clouding your judgment. And in reality, as we know, you've got to have the strategy that's profitable, but if you're not executing it right, if you're kind of breaking rules and you're not approaching a thing with the clarity of mind, you're going to lose money. So that's also why you can get clusters of winners of losers. And let's look at on the flip side, let's look at on the positive side. You know, if you're in the right frame of mind, so you're kind of, you're upbeat about things, you're confident, you feel comfortable with trading, you're alert, you're in the zone, all those kind of good things, you're trading well, then you'll get those clusters of winners, assuming the strategy is working. So the sweet spot we want is we want the market to be in the right conditions for our strategy, and we also want the mindset to be in the right conditions for our strategy. Our mindset to be in the right conditions. I guess we could do. Our brain is operating under the right conditions. That's a better phrase for you guys. So those two, we have those together and we get the perfect kind of synergy. So how do we spot these? How do we go back and look at the data and say, well, actually, it's mindset, it's this? First of all, we've got to be keeping journals. We've got to be noting down stuff. We've got to be noting down how we're feeling about things. We've got to be noting down all this kind of other stuff. And if we haven't, we can kind of guess a little bit. It's much better if we do note it down. We can kind of guess and we can go back and we can say, hey, you know what? If I had 5 losers in a row, then I had another 5. You can probably guess to yourself, and you know yourself more better than anybody. After your 5 losers in a row, you were pretty annoyed. You were pretty angry about it. So there's additional 5 probably didn't need to happen. I know from personal experience, if I had a bad drawdown on the day, you know, early in my years, I would dig a bigger hole for myself. And actually, if I just stopped, I would do so much better. And it's just recognizing that kind of thing. And that was definitely, you know, a mindset kind of thing that gave me a clusters of losers. So go back, look at your statements, look at your performance, and say to yourself, look at it and say, well, is it the market conditions? The market conditions are right for this strategy. I need to see when to pull the plug. So I need to say, okay, well, it works very, very well in this conditions. However, when we kind of shift over and we move to more quieter conditions or volatile conditions, depending on which strategy we're using, I tend to get clusters of losers. How can I identify that? I can identify that by seeing that I get 3 losers in a row. Or I can identify that by saying the average true range of the market I'm trading is X. Couple of different kind of ways of looking at it, but the point is you're identifying what causes the clusters of winners for the market condition, what causes the clusters of losers for the market condition, and then implementing something that's going to help you move forward in a better way, in a better manner in the future. Similarly, for the mindset, just as the example I gave you a second ago, losers might be because you've had, ironically, 3 losers before and they cause you to have a bad losing day the next day. So if that's the case and you recognize that's what's forming the cluster of trades, losing trades, what can you do to kind of put the brakes on that and say, well, actually, you know what, if I can halve those losers, that cluster of losers, I'm going to improve my bottom line. Same with the winners. You can say, hey, actually, when I'm in the right mindset and I'm in the zone, I'm feeling great, and it's because I've done exercise or I've done this or I've done that, or I'm ready for the day and I'm prepared, whatever it may be, then I have clusters of winners. Then you can say, well, actually, market's right, mindset's right, put more risk on the table, or trade more aggressively, or whatever it is, make more money when I'm in the right zone and be much more aggressive in terms of pulling the plug. And more defensive is probably the right word, more defensive when I get parameters that suggest I've got a cluster of losers because the market's not quite the right conditions. I get a cluster of losers because my mindset's not in the right conditions. So 2 different things to look at, guys. Again, it's all about analyzing your previous performance and seeing what you've been doing, digging down into it and finding out exactly the source of these winners, the source of these losers, how you can boost that cluster of winners and shrink the cluster of losers. Anyway, guys, comments in the comment section below. Good trading. Take care, manage your risk. See you in the next one. Goodbye.